following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Well, good morning, good afternoon. Welcome back. This is the Develop Your Edge segment of our NinjaTrader live stream, hosted by Anthony Crudele. I'll be your co-host, Tom Schneider, CMT with NinjaTrader. It's my pleasure to welcome back to the show, of course, Anthony Crudele. How you doing, Anthony?
Tom, great to be with everybody. It's Easter weekend. It's a family show. I posted a picture of myself and my nephew. My nephew is joining me today on Develop Your Edge. Joey.
Hello, Miss Lady.
Oh, I love it.
He nailed it. So what is that, right? That's the stepbrothers. I said, I wanted you to come in like the stepbrothers and stand behind me and go, hello, Miss Lady. So you nailed it, Joe. So thank you, buddy.
That's a great audition. Good job, Joey.
And so we're excited today. It's end of the month, end of the quarter, kind of a unique time. I'm tying this in with the micro Bitcoin today. When we had this on the schedule to talk about micro Bitcoin, I also knew it was end of the month, end of the quarter, Easter week. So I knew I was going to be dabbling in a little bit with that as well. But yeah, micro Bitcoin is going to be a big part of the focus today, but we're not going to not talk about end of the month, end of the quarter, Tom. We have to.
You have to. And definitely things happen around the end of periods like the end of the quarter that might provide a little bit of different trading, right? And a lot of it has to do with stock index futures with rebalancing.
Absolutely. And I'm not going to come on here and tell you that I'm an expert on rebalancing and all these other different things, that I have no idea what's happening in the workings behind the market. But what I am good at is recognizing end of the month flows, what they may potentially be. And this is not a science. This is an art. I think anytime you're looking at something that is not something that you're doing on a consistent, regular basis, even though we're doing it only 12 times a year and only 4 times a year for the quarter. End of the month, end of the quarter is more of an art. It's more of, like we said, flows, rebalancing, the inner workings of things that we may not know what's happening behind the scenes, but I have experienced firsthand how end of the month can be a volatile time period. And then we'll look at what happened at the beginning of the months, beginning of the quarters, to kind of give us an idea of what may happen at the end of the month, end of the quarters.
Right. And especially with the quarter and the month kind of coming on the same day, it'll be interesting to see when those line up and when they don't, right?
And you know what's really weird, Tom? And I was thinking back and I was looking back at my charts and I was wondering, has there been a time where we've had an end of the month, end of the quarter on a day before a data point and a day off, right? And I think even Powell speaking tomorrow too. It's a very strange last day of the month, last day of the quarter. I think it throws a lot of things off. I think it's why I heard you and Jimmy talking about volumes down. It's hard to initiate any sort of position going into what's going to be in the close today and tomorrow morning, when most of us will not be here trading. I know Globex will be open, I think, for a period of time, and I think bonds might be open for even half day. But nonetheless, you're not going to have a lot of people at the screens.
Right. And you mentioned data point. It's a pretty big data point, right? PCE. Yeah. It's the inflation factor that the Fed likes to look at. What were they thinking releasing it on Good Friday?
I know. I'm surprised that they didn't shift a little bit on that and actually allow the end of the month, end of the quarter flows also to have a full day. I mean, obviously, it's Good Friday. I'm Catholic. I'll be celebrating it, and I wouldn't be here, but I think for when it comes to look at the last day of the year, like New Year's Eve is always a full day because they never let New Year's Eve, end of the year, end of the month, end of the quarter, end on a half day. So it's kind of interesting that kind of landed this year, but nonetheless, that's stuff that's out of our control. But what I wanted to do is I want to go to the charts before we get to micro Bitcoin. Actually, let's start with micro Bitcoin and go to end of the month, end of the quarter first. I think that's a good thing to do. So today's focus was Bitcoin, micro Bitcoin. So I was actually talking with, with my nephew a little bit about Bitcoin, and obviously, he's heard it. He's heard about it. He's 10 years old. We're talking a little bit about crypto, and I try to explain futures. And so my thought process is today, let's talk about the basics of what futures are, and we'll get into micro Bitcoin. And I'm going to talk about the strategy that I use for it, because it is a little bit different the way I approach Bitcoin versus the way I approach the other markets. First, you have the Bitcoin, which is the main contract. So if Bitcoin right now, on NinjaTrader, you can pull up just the Bitcoin market, which is not the futures market. And the reason why it's important to start your technical analysis there is because, Bitcoin's interesting in a market because it's so fragmented, right? I mean, you could go and look at Bitcoin on Binance and it's going to have a different price that's traded versus Coinbase versus all the other ones, right? And so CME has an average that then will determine kind of how that's pinned off of what's going to happen with the futures, right? And the futures markets are its own market too. So it's a really fragmented market, right? You're going to look at futures versus spot and different spot prices, and it's just going to have a lot of different prices. But I think you start off with the regular Bitcoin and you do your analysis. And I look at Bitcoin in waves. I don't look at Bitcoin with super short-term indications. I think it's just too difficult. You guys were showing the NASDAQ chart. When you look at the Bitcoin, you guys are showing the NASDAQ dome. Look at Bitcoin. It moves very fast. It's very similar to a NASDAQ, and in some ways even more volatile, right, in terms of points. So I like to look at it and peel it back a little bit, and I like to look at it and trading it in waves. And so the first thing that we're going to look at is, this is the Bitcoin chart. I actually had the futures up there. And what I look at is a daily chart. We always talk about environments here. And for Bitcoin, this has not changed my thinking at all. Expansion, is it expanding ranges? Is it contraction? Is it mean reversion? Is it consolidation? That's all we're going to look for, right? Because Bitcoin is one of these markets that will go way further than you think, and it will retrace way further than you think. And so you need some guidelines on a daily chart to understand what environment you're in. And I think that when you're looking at these other tools, I think short-term indicators and other, like where you're going to use VWAPs, I don't use those as much because it's so fragmented. So I don't even look at them, because you're not really getting a true, I don't want to say feel, but really of where a lot of that volume could be taking place. It could be taking a lot of volume in spot, and it could be a lot of volume in futures in different places. So you're not really knowing where that centrally located price is versus like S&P futures. We know that that's kind of more of the center of the universe. So order flow tools work really good on there, VWAPs, cumulative delta, and all that. So I don't look at that as much on a Bitcoin because of the fragmentation of it. So I look at, where are we? We had range expansion as Bollinger Bands were going outward, going back end of February. We've all seen this big move in Bitcoin. Bollinger Bands outward, 5-day moving average. Once again, you can see it's one of those things. Bitcoin, when it trends, it stays on a trendy. It just stays really solid with it. And then all of a sudden, we talked about this in one of the previous shows, Tom, you have the top Bollinger Band coming in. The bottom one was already coming in. You're coming off of a way overbought RSI for really several weeks. And it finally gets below that 5-day moving average, and you get a rotation. 50% was 61,700 and change. Look at that. It basically went right to that Fibonacci retracement between the two Bollinger Band peaks, pretty much almost, right as close to the tick as you're going to be. That is, to me, where you look at a rotation here down, and then if it doesn't get below the 50%, it tells you that the momentum is still very much upward. And it's back above the 5-day. And then you see here that we're actually back above the 5-day and above the 30%, which is 70,451. Now that we're back up in here and you see the Bollinger Bands are starting to point outward, we went from expansion early in March, end of Feb. We went to contraction, somewhat of consolidation. Now we're back in the potential of range expansion. And so why you have to get that in your mind first, and why that's so important for any trader, is because you have to realize what environment Bitcoin is in order to better execute any strategy that you're going to trade, because it moves in waves and cycles, right? It more than probably any other market, it's going to be technically driven, because what are really the fundamentals in Bitcoin? I don't really know, Tom. Are there any?
I don't know. One thing to note though, Anthony, with your chart is when you move from that 30% to 50%, found support at 50%, that's not an insignificant move. Like we might see that on a different chart where it's, kind of a normal move, normal being maybe a 1%, 2% move. That's a 10% move. It's more than that, actually. It's like 13, like that's a big deal. So that's why it's so important when you see the breakdown through the 5 to the 50%, you see the bands contracting. To me, that's like, wow, this actually in Bitcoin can be a bigger deal than a lot of other markets.
Absolutely. And when I'm looking to trade Bitcoin, I'm looking at where are we in this cycle environment? Where are we with it? And this is the best tool I have found for it. And so it's just very simple. You know what I mean? There you could obviously go and fine tune this and take this into a whole nother level. But for me, I keep it simple. Do I want to be long? Do I want to be short? Is it consolidation? Are we going higher? Are we going lower? That's it. That's the way I look at these markets. I'll find good stops. I'll find potential targets, but I need to understand in what part of Bitcoin is in a certain environment. And right now, as we start to push up here, if we were to start to see us continually hold above 70,400 in the cash, you could start to see this thing look to make new highs again. And then where would you have your big picture target? Bitcoin also, unlike a lot of the other markets, it will tend to run to these kind of extreme targets, we'll call them. And old highs of peaks, okay, are areas where I look at for resistance or potentially support. So you see this old peak here. When we started to expand back in this scenario right here, if we actually go back and look at this right here, let's get my fib again, and you look and see what happened on this peak, you look to see that we had a rotation off the 30%, didn't quite get to 50%, but we're in this moment right here, which is very similar to this. It eventually took a few days and it ran to that old peak. Right? That to me would come in right about 83,550.
Yeah.
And so that is very possible. Okay. Now we get into micro Bitcoin futures. And to me, yeah, I'll take it down to the 30-minute time frame. And anytime that I look for, or I have a environment that I know what I'm looking for, I then will go to my 30-minute on the Bitcoin. You could even do an hourly. I tend to like 30 minutes. And I'll do that same type of strategy, but just on a shorter time period.
Sure.
And also what I want to do is real quick, Tom, maybe you and I moved it back to candles. Micro Bitcoin versus Bitcoin, right? Bitcoin futures, is $25 per tick versus a micro Bitcoin is going to be 1/10 of one Bitcoin.
Yeah.
So when you look at a tick, everybody, and you look at how much Bitcoin moves, you have to think of 1/10 of one Bitcoin. So if you bought one Bitcoin at 72,000, it would be you're actually buying an equivalent of 1/10 the value of that. And so when you get to 10, you get to 10 contracts. That actually is equivalent to the movement of what one Bitcoin would be versus the Bitcoin futures. I believe, and I haven't traded it in a while, I think it's 5 Bitcoin, if I'm not mistaken.
So Anthony, I want to go back to your last chart real quick. Your target up at 83,000 based on those Bollinger Bands, right? That corresponds to that 83,551 roughly, let's say, give or take. There's a cup and handle. Cup and handle formation that's kind of forming right now that implies about that same target. So, it's interesting to see technicals do really come together for crypto more than I think fundamentals do. Fundamentals aren't as I shouldn't say predictable because technicals aren't 100% as well, but there is an indication that around 83,500, 83,600 based on a traditional technical pattern is in place as well.
Isn't that funny, Tom, how two people can look at a chart, the exact same chart, and you can see that and I don't see that, right? Isn't it funny? I think that's such an important just point here to make, is that when people look at charts, you have to embrace what it is that you see. So I don't look at patterns in terms of that, like a cup and handle, or I mean, you know, Head and Shoulders. I see them. If someone goes, oh yeah, that's there. And I'm like, oh, obviously right now I see it. It's not that I don't see it. The point is, what do you see as a trader when you look at markets? And what I look at is I want to know, I get almost to the point where I literally only want to know if we are in an environment that supports being long or short. And that's why I like the Bollinger Bands, because for me, if I go to trade like a pattern, I then get to a point where I'm like, how do I execute this? I know that there might be a traditional way with a stop and all of that. And ultimately, it takes me a little bit away of my natural way of the way that I look at and want to execute markets. So for me, I almost have a line in the sand. I won't be long if it can't hold above 70,400 versus a cup and handle. Correct me if I'm wrong. How long would I have to try and be long there?
Well, that's exactly it, right? It's what you're familiar with, how you understand the market works, what you're looking for. And Bitcoin's a newer technology, newer market. It might not adhere to the patterns that we're used to working with. And it's really what you're familiar with. Agreed. You know, cup and handle pattern, great, but there's no time period, right? Like there's a target, but is it 5 years from now? Is it 5 months from now or 5 days from now? There's none of that. So totally agree. It's just one of these things where you see these things line up a little bit, and I'm almost disappointed when they don't make it. But I agree. You know, the volatility issue I think is far more compelling than a traditional technical pattern because this isn't a traditional market.
And I think that when you look at these patterns, everybody, this goes back to where like a micro Bitcoin can be a really good fit because it allows you to be in 1/10 of one Bitcoin, you know, in the futures market. And it allows you to manage risk, and you can have a much wider stop, right? When you're trading a micro Bitcoin versus trading the bigger Bitcoin futures, you know, that's going to be for the people that are, you know, I think doing more hedging or on the much bigger scale of trading Bitcoin. I personally, when I trade Bitcoin, I use micro Bitcoin because I could scale into as much as I want. I haven't traded the big Bitcoin contract in probably over a year. And the micro Bitcoin just fits right into where I want to be able to scale in, because once again, when prices are really wide, when I look at this, I'm not trading this as a day trade. I'm trading this as a swing trade. I want to be able to hold the position. And when you see these different things, this is one of the great things I like about having these futures markets, is that you can look at the cash markets and then you can execute using the futures markets, and you could manage your risk, I think, a lot better because you have, you know, you're used to doing that as a futures trader on these futures markets with these futures platforms. Now, a couple of things I want to note when you are looking at the futures, because they have different rollovers. So when you go back and look at your target here on the Bitcoin futures, it's 86,590. So it's much higher. But look at where the futures contract is trading, 72,380 versus the other one, which is trading 71,400. So what I look at is this. I go back to, this is where I think the technicals work better when you're looking at the spot versus looking at the futures. The futures markets, the rotation wasn't as clean. It didn't quite hit the target. You don't have the same technicals on the futures as you do on the actual cash markets. From my experience, you're better off charting on the Bitcoin and then going to the futures and finding that differential in that price and executing according to that, because I think that the technicals work better on the Bitcoin. This is a preference. I may be wrong to some people in some strategies, but I can tell you in my experience, when I've looked at these, it seems like the rotation on these, on the regular Bitcoin, just seems to work cleaner. Now, final thing before I get to end of the month, end of the quarter, because I know we're running short on time. When I get to my 30-minute chart, I wait for the blow off, you know, like let's just say I want to be long. I wait for the markets to get these blow off lows. 30 minutes is my preferable time frame. I use that same pattern. I don't have anything else up on this chart. Once I see that the Bollinger Bands are coming in and we're holding a 30% line, I use 30, 50, and 70% lines on a fib. Then I look for the rotation. And you can see here, once it starts to hold above it, I'm long above 69,128. And to me, I typically will put a stop around that swing low, whatever that is, once it establishes above that. And that's where I look for targets, 7148, 71,169, and so on. As you can see here, we're expanding even range expansion on a 30-minute in Bitcoin. So I don't look at shorts when we're in range expansion higher in Bitcoin. I never want to fade Bitcoin in any environment we're in because it's just too fast and far moving of a market. That's why I look at ebb and flows using Bollinger Bands and Fibonacci retracements.
Right. And, one point about futures versus spot, I noticed, speaking of those Bollinger Bands, you didn't have that expansion that was beginning in the spot, that you didn't have it in the future. So even though you had the breakup above your 70% level, you didn't get that expansion. So you might have a little bit of and this is the spot. You don't have those they're still kind of sideways to contracting. You don't have that expansion like you did on the spot.
Yeah, and you know what? It's just because I think when you have ticks in a futures market, I know you have ticks in Bitcoin, which is just basically a price. You can call it a tick or whatever. But because it's moving so many more ticks and there's all these different prices that are trading way more prices versus you have less price action technically in the futures, you're going to see more of the volatility within the price action. So the technicals seem to work better when you're at least looking at these types of technical analysis tools. That might be different with some other ones. Like I said, do your homework, see what works best for you. That's ultimately what's so important. Just like we talked about, Tom, with like looking at a cup and handle or looking at range expansion the way I do at Bollinger Bands. There is no right or wrong way to do this. It's the way that you're comfortable with and the way that you're going to be the most confident when you're executing.
Right.
End of the month, end of the quarter. Everybody knows this is my everybody knows this is my favorite day to trade, typically. Now, when we get to end of the quarter, it's a little bit of a different thought process I have than end of the month. First thing I'll do is this. Let's go back to 2023. Here we are. What happened in the first day of 2023? Why am I going this far back? I'll get there. 2023, first day opened up and went lower in the E-mini S&P. It's a continuation chart on Ninja. What did the first day of March do? First day of March opened up and went lower. I looked at the overall what happened within the year, and you could see that the market actually, even though both first days of the month were lower, the markets trended higher off of those days. And the last day of the month, the last day of the first quarter was higher. Okay. And the reason why I look at this is because I look for nuance. Like what's happening? Sellers at the beginning of the month, buyers at the end of the month. Sellers at the beginning of the month, buyers at the end of the month, end of the quarter. You saw this on pretty much a very consistent basis. I know it kind of stutter-stepped a few months throughout the year last year, but when I noticed that, and you can even go back and look at my tweets, I was a buyer at the end of January. I was a buyer at the end of, I think first of February is an up month. I was a seller. The first 3 months, I caught it really good because it was doing the opposite of each one. So it's pretty interesting in how that works, okay? And so then I go and look to see what's been happening this year. And here we are. And then, like I said, this is not a science. It's just something that I'm looking at in terms of nuance, like what is happening overall in the market. First day of the month, first day of the year this year, down, right? We've all talked about that. We had a lower start to the year. Market rallied into the end of the month, okay? But actually the last day of the month was down. First day of March was up, okay? And then you get towards the end of the month now, you look at it and go, what's it doing? It's pretty much flat. I don't think it's doing too much today. It's easily could sway one way or the other into the close. And so what you have is you have what I consider a very confused market, right? A lot of times flows will be the opposite. You'll see selling come in the first day of the month, buyers come in at the end of the month. And you'll see a lot of these strategies that'll be the same thing for the day. Buyers on the opening of the day. That's why a lot of people look at opening range. Sellers under the close. Doesn't matter kind of what the day did, but you'll see those flows a lot of times be opposite. And sometimes there's a consistency in markets that are trending really strong. It's buyers in the open, buyers in the close, or vice versa at the end, where there'll be sellers in the open, sellers in the close. So it's about looking for nuance. That's what it comes down to. I look at this end of the month and talking about the things that we talked about why you see so many people really sitting out right now. You got sellers the first day of the year, first day of the quarter. You've got buyers the first day of the month. The end of the months have been choppy. We've been this grinding up market. I think it actually really explains why this environment's so tough right now for traders and why volatility is really shrinking. It tells me really that people are struggling to believe into the reality. The flows are inconsistent. You can see that every day within the tape. It's why I've been saying it's a two-way tape for the last several weeks in my free morning letter. And I think the end of this month is going to be two-way action. I don't think you're going to see a dominant side. You're not seeing people really be confident in flows so far in 2024. And so that tells me on a regular basis, be very patient, really sit back and let the market force you in no matter what strategy you're doing, because these are the types of markets that will really test traders' patience. And a lot of times these are the markets that weed traders out. They weed them out because their strategy works great one day and the next day it doesn't. You see a lot of that ebb and flow of what's working and then what's not, right? And identifying that we're in this type of environment is so important. I've said on a personal note, I have really dialed back my risk purely because I'm seeing things where it's working really good. And the next day, I just have no idea what's going to happen in this market. And I've just been staying really small and smart, as I say, on a regular basis, because I think the market is, even though it looks clear in the trend internally within the tape, it's not that clear. It's not that clean. And so end of the month today, I think it's going to be a choppy one.
So we've talked about on Jim, Mike, and I have talked about the low volume, right? Easter weekend is coming. We have spring break, as you well know, right? Because you have some guests. They're probably on their spring break, leading to low volume. The past couple of weeks, the absence of any meaningful news this week. Well, except for tomorrow, which we can't trade on. Do you see volume start to come back next week as spring break is over, Easter's over, let's get back to work and volume comes in?
I'm not sure that's going to happen. I think volume coming in is going to be a product of how volatile we get. I mean, I think obviously what PCE does, and I still think even PCE, man, I don't know. I just feel like this time of the year, when I look at this type of market, I feel like you have to really lower expectations and expect the fact that we might be sideways and choppy and maybe just a grinder higher, and we don't get a lot of volatility. And if it does happen, great, but I'm not going to set my level of expectation that it's going to come in right now, because for me, I need to see proof. I need to see consistent proof that the markets are coming back with volatility. It's an election year. The Fed has done an amazing job in terms of talking dovish, but not cutting rates. I think that's something that they've done very well. You could disagree that the Fed's done a great job at raising rates or lowering rates, but I think in terms of the way that they're communicating to traders and investors, they've done a really good job at really taking volatility out of the market. I mean, it's the bottom line. I mean, they're succeeding and people believing they had 6 to 7 cuts possibly. I know that they didn't say that, but market was projecting it down to 3, maybe now 2, or who even knows if we get them, and the market's steady as she goes. We've talked about this. Maybe we're just in a bull market, Tom, in a low volatility cycle. And that's just the way it is for a while. I've been through them. I've seen people get chopped up and overtrade them and overthink them. When it comes down to it, I just have to dial it back and be small and smart, because my only job is to be here tomorrow. And that's all that matters. I can't set my expectations too high and come in and try to do something that's just not there.
You can't force it. I think you mentioned, the volatility, the Fed, Janet Yellen was an expert at that, right? She had a daunting task, and she kept volatility volatility in the markets were really low when she was Fed chair, and I think Powell's doing the same thing. Maybe it's collaborating with Yellen has helped do that, but I think you're right. The communications, the messaging has been spot on.
Yeah, I mean, once again, we're going to see how the end of the year goes. And I just recently did a podcast. The Fed really hasn't been challenged. Let's see how this data is. What if this data comes in hot? What if something comes in and the Fed is all of a sudden like, well, hey, we don't see a path to cutting rates this year. How does that change the dynamic? There's a lot to really possibly unfold here. And I think at this point, unless something jars the system, I think even geopolitically, we've seen a few things happen that's not necessarily jarred the markets. Unless something really comes in and shakes this and stirs this up, this could be where we are for months.
Awesome. Anthony, thanks so much. We're running up against time. How can people find you?
AnthonyCrudele.com. Also, to learn more about Bitcoin and micro Bitcoin futures, go to cmegroup.com. I think it's really important if you're looking at getting ready to trade a new product, learn about it and confirm the tick values and all the margins and stuff with your brokers. And I just want to wish everybody an absolutely wonderful Easter. If you do celebrate, it's a special time for me having my family down here. Thank you, Joey, for being here with us. I got my brother and my niece, Annalise, in the other room, my brother, Chuck. And so it's great to be with family this weekend. And everybody, don't think about markets this weekend. Even if you're not participating in Easter, take the time off. You need it. You deserve it. Come back fresh next week.
Love it. Anthony, happy Easter to you and your family, and hope you have a good weekend.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.